we've talked a lot over the course of the last several quarters and maybe even multiple years now about the secular bull run in technology. Is it over?
I think we should expect from time to time profit taking because tech has been a leader for the last decade, and it is overbought. So I think it is going to be from time to time going to show extended weakness. But to me, the underlying story driving technology, which is the productivity miracle coming from AI, is still intact. Mary Erdos even talked about this earlier this week from JP Morgan that there's been a payoff in spending, and Lisa Su at AMD as well as noting that that productivity lift is the reason AI spending is rising. That's actually still a tailwind for tech stocks.
Tom, if I could just follow up, you manage funds now, especially an ETF that's heavily tilted in some ways towards some parts of that kind of technology, media, and telecom trade. Has anything changed with regard to the price action or the fundamentals that have taken some of those names perhaps out of your portfolios?
Dom, we just actually did a rebalance for the Granny Shots ETF, our large cap fund. We still actually have about 40% exposure to tech. It's about a market weight, but to us, the visibility and the spending is still very strong, and names like NVIDIA are still reasonably priced. I mean, NVIDIA at 28 times forward earnings is still less expensive than buying Walmart or Costco. Costco is almost 50 times forward earnings.
All right, Ross, with that in mind, as you watch the price action play out, does it surprise you at all that we've seen this kind of a sell-off? Could we expect more of this in the coming weeks?
I don't know if we'll get more of it, but investors should expect more of it. I mean, if you look even at the late 90s during the heyday of the dot-com bubble, 96 double-digit sell-off, 97 double-digit sell-off in the NASDAQ, 98 big sell-off on LTCM and some other weakness, and then 99 even big sell-off in the NASDAQ. So double-digit sell-offs even in bull markets driven by new technologies and exciting new technologies are really common. And this one, is just par for the course, I think, amid a broader bull market. So as long as the technicals and the underlying trend isn't too damaged, I think it is a dip you can buy. But I think investors should always expect a little bit more weakness. We've been on a tremendous run off the April lows. That kind of momentum can't sustain forever.
Ross, do you feel as though there is any kind of a case to be made for a possible rotation trade? We've been exploring the possibility that maybe this broadening out could include less AI and tech and more things like perhaps energy or financials, something else along those lines. Does that thesis play out in the coming quarters in your mind?
Sure. And I think it's incredibly healthy that as AI is pulling back, we're getting some nascent leadership from things like energy. Healthcare has had a tremendous month thus far after being really beaten up for a couple of years. Financials, big banks, both in the U.S. and globally, have held up solidly. So, obviously the headline indexes are going to be weighed if big tech sells off. But I think it's incredibly healthy both on the earnings front and on the price front that you're seeing some breadth, especially at a time when the question about the broader economy outside of AI is how healthy is it, right? So this is a really good sign to me, and I'm happy to take a little bit of gains from tech and rotate into some nascent leadership there in other sectors.
Tom, the tariff tantrum issues aside from earlier this spring, specifically in April, we haven't really seen any kind of a pullback last that long. It seems like these things are getting shallower, they're getting shorter in duration. If it is the case here, does it still play out that way? And if so, what exactly then goes on shopping lists? I mean, you mentioned your ETF, GRNY, Granny Shots. Is there anything that you would be thinking about buying more of? I know that the rebalance is already there, but what kind of stocks actually go and you want to buy on discount here heading to the year end?
Yeah, well, I think it is helpful to think about where we are in the cycle. I know the Fed is a little hesitant the reason to cut in December, but the reason they're hesitant to cut is the economy is actually pretty healthy, and they just don't have a clear contour of how quickly inflation's cooling. That's a very good backdrop for corporate earnings, actually even corporate earnings to actually start to spread. So if the Fed gives us some guidance and visibility about, path forward, I do think business confidence picks up. That means that ISM starts to recover, and it is a broadening trade. So I would agree with the other speaker that, I like tech structurally because of AI spending, but there's still plenty of room for the small caps to work, which have really taken it in the gut as the Fed's sounded hawkish. and the banks. And so I'd be in sort of favor of a broadening trade as well. But I still like tech. And as you know, the AI trade comes under question every few months. There's always a big pullback, but for the last 5 years, investors have had to buy that pullback.
Ross, we'll give you the final word here. Does the Fed need to cut rates in December for this market rally to keep going?
They don't need to cut rates to keep the rally going. I think they should cut rates. I think there's enough labor market weakness and there's not enough upside pressure from inflation that they should be at least getting to their neutral policy stance with some haste. I don't think there's any reason to pause. We don't have any data, so I don't know what has caused the hawkish turn. Obviously, the underlying economy is not in recession. It's fairly healthy, but we're in a restrictive stance. I think we could get to a neutral policy and then go from there. I don't think they need to cut. I just think they should.
All right. I lied because, Tom, I'm going to give you the last word. I want to hear what you think. Does the Fed need to cut rates for this rally to continue?
I think from a market's perspective and from the economy's perspective, we know that high rates are actually causing pressure on the housing market. That is, something that I think the Fed actually has some, can actually have some impact on. So I do think it makes sense for the Fed to cut.